Good morning, traders from whichever side of the country world you're watching me from. Welcome to today's morning market call. Special shout out to Forensic Kamau, Ndungu Shiko, Pato, Onesmus Logan, and Tolgal. Welcome to the stream. It is the second week of December. Beautiful start to December, and there's a lot of opportunities for us as traders. And I want us to look at the virtual to real demo contest. Has funds been an issue for you to start trading? Do not worry. You have the opportunity to trade with HFM, the virtual to real demo contest, where it starts with a demo account. If you do happen to be on the leaderboard, number one is going to be credited $500 into their account. Not only that, they are going to receive a crystal obelisk. Beautiful. Number two is going to be credited $300 into their account. Number three is going to be credited $100 into their account. Looking at the leaderboard currently as it stands, we have Benson Gishane with the 2,164% at the top, and then we do have Kennedy Ongera at number 10 with the 259%. You have an opportunity to trade from a demo to a live account only with the HFM. Beautiful stuff. Now moving over to, we do have webinars. I'm going to conduct one in the next 8 hours and 56 minutes counting. I'm going to get you started with HFM. If you have been thinking about starting your forex journey, how to learn forex the right way, I am the guy. Go over to the HFM webinars, register now, click register now, book your slot as early as now. If you're not want for the physical classes, I do have live trading classes. Okay, now we are starting ours today, 8th of December till 12th of December. It's going to be a complete course on its own. Learn how to trade the right way. Click register now, book your slot. If you're a new trader, if you're an existing client, click on existing client, register, book your slot right now. If you are a new client, fill in your details. I shall see you at the Oval Building. It's going to be in Westlands, 5th floor of Ring Road. It's major. You want us to talk about the Shield 500? Yes, sir. We can't talk about the Shield 500 account. And you have the opportunity. Let's look at this beautiful
Introducing
video.
the HFM Shield 500 account, a revolutionary new account specifically for new traders. Within your first 25 days, trade with a peace of mind knowing up to $500 in losses are fully covered as tradable funds. It is your chance to learn, practice, and grow with confidence. Ready to kickstart your trading journey? Sign up today and deposit within the first 10 days to get full access to this exclusive offer. Click below to get started, only with HFM.
Only with HFM, as you have witnessed in that video. You have an opportunity. If you are a new trader, if you do open an account, register within the first 10 days, you are eligible for the Shield 500 account. Any money you do deposit between $10 and $500, whatever losses you do incur within the first 25 days, we are going to give it back to you up to $500 in tradable funds. Let's say, for example, today you deposit $100, and then worst case scenario, you do lose your money. If you do deposit another $100 and worst case scenario, you do lose your money, that's a total of $200 you did deposit. Within 25 days, we are going to credit you back another $200 in terms of tradable funds in the market. That is Shield 500 for you, ladies and gentlemen. So not anybody is qualified. No, you only new traders if you do register the account within the first 10 days of registering. Now, moving over to the bonuses and promotions, we still have a few bonuses. The score and draw is the pièce de resistance that we do have currently ongoing at the moment, and I'll talk about that in just a few moments' time, where you have an opportunity as Africa too. Beautiful. We do have the score and raw challenge that is currently ongoing. It did start on 1st of November. It's going to conclude on 28th of February 2026. We are going to give you away a brand new BMW 4 Series. Not only that, a UK Premier League trip for two, all expenses paid for. Flights, tickets, accommodations, everything will be catered for you, the traders. We are going to have four lucky winners taking home a 555-inch TV. These are 4K UHD TV that you are going to be eligible to take home. Not only that, 20 winners are going to be gifted official EPL football jerseys of their own choice, and 60 lucky traders are going to be credited $200 each into their account. Quite interesting. Utilize the opportunities that HFM are currently offering. We are the most rewarding broker in the world. I would want us to go into the morning market call and starting us off with the day. Remember, once again, this is the second week of December. We do anticipate a lot of activities, and I'm here to take you through how you can capitalize on these opportunities. Starting off the day, we do have Immaculate Conception Day. This is going to affect most of the pairs that are in the Euro region. Now, this is a Catholic holiday. Now, whenever there's a holiday, we usually see banks closing down, which means liquidity is going to be relatively thin. And as a result, speculators are going to have much more power in the markets. There are one of two things you can expect: either low volatility or irregular volatility. You would want to be careful if you're trading any of these pairs, especially Euro pairs. Now, moving over to the day, we have just received industrial production for the month-on-month to October numbers for Germany. The previous number was 1.3%. We were anticipating a forecast of negative 0.4%. The data has actually come in better than anticipated at 1.8%, meaning industrial production in the Germany region is headed in the right direction. Now, moving over to the day, I would want us to look at the entire economic calendar, look at what we are anticipating, and volatility is anticipated to start picking up tomorrow, which is going to be Tuesday, 9th of December. Earlier on, during late Asian session, we are going to have Reserve Bank of Australia releasing the interest rate decision. Now, the previous number is 3.6. We are anticipating RBA to hold the interest rates at 3.6 also. The actual number has not yet come out. And today's morning market call, I would want to talk about why this is very important. When you're looking at the central banks, one of their main mandates is to offer forward guidance. They tell us where they anticipate the economy is generally headed to in the near future. Now, currently at the moment as it stands, we want to look at the report, the statement itself. Okay, judging from where they are from, where they are currently at the moment, and where they could head to, now the future is where we traders really want to pay close attention to. And I'll want to look at a chart of Australian dollar against US dollar. What does this mean for us as traders? Now, continuing over with the day, we do have commitment of traders report being updated. Now, there was a backlog of releases. Currently, at the moment, as it stands, we are still receiving news commitment of traders report for last month. Currently, at the moment, it is not yet updated to where I would want to pay attention to. But come 26th of January 2026, the commitment of traders report is going to go back to normal releases, and I would want to pay attention to it. Now, looking at Wednesday, this is where volatility will continue picking up. We do anticipate CPI numbers for the Chinese yuan. Looking at the previous number of 0.2, we are anticipating inflationary numbers to pick up in the Chinese region up to 0.9%. Quite interesting, noting how this is going to affect the Chinese yuan against the United States dollar at exactly 4:30 a.m. on Wednesday morning. The highlight of the week, everything has been boiling down to this moment in time, and this week could set the tone for the next few months. We do anticipate the Fed Reserve to hold their final projections of the year. And once again, we want to look at what Federal Chair Jerome Powell is going to say in terms of where are we currently at the moment, but most importantly, where are we headed to in the near future? Looking at exactly, this is going to be at 10 p.m. Nairobi time. We do anticipate 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 news releases that are going to affect the United States dollar. But the most important one is going to be the Fed rate interest the Fed interest rate decision, where focused currently at the moment, we are anticipating interest rates to be lowered to 375 basis points. Currently, at the moment, as it stands, interest rates are at 4%, but we do anticipate a 25 basis point cut. Now, 30 minutes later, this is where most of the volatility is anticipated to come through at the FOMC press conference speech, where we want to listen to Jerome Powell. What does he have in terms of future monetary outlook? And I would want to look at a few numbers just to put it into perspective where we have come from and how it could shape the near future. Looking at inflationary numbers, ever since April, we have been seeing inflation peak to the upper side, and this has to do with the tariffs that Mr. Donald J. Trump did enact earlier this year. Now, the costs are anticipated. We do anticipate the costs to be passed on to the consumers. Now, currently at the moment, as it stands, inflation is at 3%, and the target range for the Fed Reserve is usually between 2% and 3%. Currently at the moment, this is well within their range. Looking at the most important data that they look at is unemployment. Basically, one of the mandates of a central bank is they do want to ensure everyone is employed, 100% employment. Now, looking at unemployment, it has been ticking to the upper side ever since June of 2025. The data was at 4.1%, but we have been seeing the statistic rise to the upper side. Now, if unemployment does tick to the upper side and inflation is well between the 2 and 3%, the Fed Reserve usually are prompted to lower interest rates. Now, looking at the next FOMC meeting is going to be in the next 2 days, 11 hours and counting, where the statistics are there's an 87.2% chance we might see interest rate cuts being taken further down to 350 to 375 basis points. Now, whenever there is a low interest rate in any economy, it does weaken the currency because investors would want to park their money into higher yielding assets. Let's say, for example, gold, stocks, and we are going to look at the charts in just a second. How is this going to affect price action in the near future? Once again, we do have the Shield 500 account. Capitalize on these opportunities. Whatever money you do, deposit between $10 and $500 within 25 days. If you're doing any losses, we are going to back you up to $500 in tradable funds. Switching gears to the charts, I would want you to engage with me. Which are some of the assets that you want me to look into? I do have several assets on my watch list here. Now, a quick disclaimer before we do continue with the analysis. The information herein is only meant for educational purposes only, shouldn't be construed as investment advice. Trading in the financial markets do carry a degree of risk, but do not worry. I'm here to help you look at the markets the right way. Starting off with the precious metal gold. We did see gold range quite aggressively the entire of last week. Looking at Friday, Thursday, Wednesday, Tuesday, and Monday, prices did close slightly below the opening price of Monday, signaling that the markets have already priced in the data. Now, the next piece of information that we are waiting on is what is the Fed Reserve going to do next year. Looking at Jerome Powell's contract is due to end May of next year, 2026, and we are looking at who is Donald Trump going to appoint as the successor of Jerome Powell. Are they going to bring in low interest rates? Are they going to hike interest rates? What does this mean? It means one thing for us as traders. There's going to be a lot of opportunities come next year. But you're going to start with where we are currently at the moment. Now, looking at price action, once again, we have been consolidating. Prices has been trading well between this range. And I would consider looking at potential scenarios if the United States are going to lower interest rates. It does weaken the economy. Investors would want to push their money into higher yielding assets. For example, gold will be considered a safe haven. We are looking at Bailey Holics, GBP, JPY, and Dungu GJ. We are going to look at that in just a few moments. And Logan wants us to look at BTC. Quite interesting. Now, looking at how the markets have opened ever since Asian session, we have been seeing prices move to the upper side considering Asian session. If investors would want to buy now, they would want to position themselves. This is the time. Toxic. Hi, Elkington. Morning market call is bright. You do look bright on your end too. Let's make this money. There's a lot of opportunities for us this coming December. Now, XAU USD. If we do break to the upper side at 42.63, I would consider looking at buying opportunities to the upper side. Whereas on the other hand, I would consider looking at prices potentially coming to this region of support. If we do fail to break 41.66, I would also consider looking at more net long opportunities. Now, it is a Monday. The weekly candle has just opened. This is the time for us traders to be very careful with price action. Switching to XAG USD, which is gold's younger brother. But this year to date, silver has been the highlight. It has taken the spotlight. Looking at ever since the year did begin, back in 2025, silver prices has moved more than 101% to the upper side. We did start the year off with silver prices trading at $28.9 an ounce. Currently at the moment as it stands, it is trading at $58.2 an ounce, signaling that yes, investors, institutions, traders are looking at safe havens. Ever since Trump did enact the tariffs, we did see silver move to the upper side. We had a short-term retracement around March of this year, but afterwards we did see the markets rally to the upper side. Then came August of 20th when Jerome Powell hinted that there is going to be an interest rate cut in these few sessions that have been remaining, and we did see silver now explode quite aggressively to the upper side. Silver has been the highlight of the year, taking the crown. Now, looking at the same pattern that we have been seeing on XAU USD, it did consolidate for a majority of last week. We did see some signs of buyers into the markets where it did break the most recent region of resistance that was formed during the week, but prices quickly recovered and settled back down in the range. Now, looking at Asian open today, we did see prices open, move to the downside. It did retrace back into the golden ratio on the Fibonacci level, and I do anticipate prices to continue moving further to the upper side. We are seeing signs of buyers in the markets. Looking at Asian session, we had one massive bearish candle, but currently at the moment as it stands, prices are retracing on the golden Fibonacci ratio. Saika Humble 56. Gold is still buy. I haven't understand. Okay. This is what I mean. Going back to XAU USD. Now we are looking at gold against the United States dollar. If the dollar is weaker, we do anticipate gold prices to continue moving further to the upper side. Considering the Fed Reserve are poised to lower interest rates this week, in the next 2 days and counting, it is going to weaken the USD once again. And as a result, gold will be stronger. Now, the highlight that we would want to pay attention to is the speech from Jerome Powell. What does he have in terms of future monetary outlook? But looking at price action, gold has been rallying to the upper side. Gold also, ever since the year did begin around this particular region here, January, ever since January to where we are trading, gold has moved almost 62% to the upper side. Gold is generally bullish, and looking at price action, we did have a short-term retracement. Currently at the moment, markets are retracing back to the upper side. We are looking at this region of resistance, which is around 42.63. This is the region that I would want to identify. If we do break to the upper side, gold is very much bullish. We did have an inquiry on GBP JPY. Now looking at Britain, just to highlight where we have come from so that we know where we are headed to. Last week, it was the week prior to last week. It was around 26th of November. We did have the UK, the Chancellor for the United Kingdom reading the budget, and we did see there was a deficit of almost 20 billion pounds. Now, what they did was that they are going to introduce new tax measures. Just to put it into perspective, there are taxes that, let's say, for example, looking at electric vehicles, they are going to be taxed per mile. So for every mile you drive on electric vehicles, you're going to pay a tax of the same. Now, what they are trying to do is they are trying to cover up for the gap that is currently at the moment. What do they do as a result? We are going to look at yields in just a moment. When there's a budget deficit, the government will want to raise funds, and most of the times they will want to offer treasuries and bonds, and they will want to make it attractive to consume to the investors as a result. and we are going to see prices of gilts in just a moment's time. Now, looking at this was the exact time that we did see the chancellor reading the budget. We did see prices of GBP, JPY move to the upper side. We had a short-term correction, but currently at the moment as it stands, this was last week's analysis. We did see it play out quite beautifully, where from this swing low to this swing high, prices retraced on the 50 and the 61.8 region. And currently at the moment as it stands, we are trading in that range. If we do break the highs around 207.28, I would consider looking at more net long opportunities. Looking at prices has made a high, then a low. Could we break the most recent high to form a new higher high? Now, looking at JPY, I do believe it's going to be on the 18th and 19th of this month. We are anticipating Bank of Japan to come to the table, and there's a high likelihood they are going to increase interest rates in the near future. Now, looking at GJ is poised to move to the upper side at the short term. Comment on USD JPY. Thank you, Osama Blue. I shall look at USD JPY. Now, looking at the dollar against the yen, this is something that we have been noticing for the past. Prices have been poised to move further to the downside. We had a change of character. Prices are making lower lows, lower highs, lower lows, lower highs. The trend overall is to the downside, signaling that sellers are in control over this market. Now, Takaichi was sworn in less than 2 months ago, and Takaichi is a fan favorite of stimulus programs. We have seen the biggest stimulus program being enacted. It's supposed to reach into the market starting next year, where Bank of Japan is going to release more than 142, was it 142 trillion Japanese yen? I stand to be corrected, but there's a lot of money that is supposed to be added to the markets. Statistic has it is almost $35 billion. $135 billion to be exact is supposed to be added into the economy. Just to put it into perspective, children below the age of 10 years are going to be credited almost $135. So parents, if you have two little ones, that's a lot of money. That's money that is going to be put into your pockets to help stimulate the markets. Now, currently at the moment when the stimulus program will be enacted, and I would want to bring you back to the last time Bank of Japan did intervene. It was around May, June, July of 2024. It was around this particular region here, where prices of USD JPY was headed to around $162. Yeah, it was around this particular region here. If I can just put it into perspective. Back in 2024, yeah, it was around June of 2024, where prices of USD JPY was moving towards 162. We have never been in these territories. Bank of Japan intervened, and within 2 days, they bought a lot of government-issued bonds, and we did see prices tanking quite aggressively. So this was the last time Bank of Japan did intervene into the markets. And looking at it, putting it into perspective once again, for the next 40-something days, 46 days to be exact, prices of USD JPY moved more than 13% to the downside. We are looking at a potential scenario in the near future where if this stimulus program is going to hit the markets, there's going to be a lot of Japanese yen in circulation, and I do anticipate prices to continue moving further to the upper side, looking to the downside, looking at ever since Asian session did open, prices did tank to the downside. We are having some sort of correction to the upper side. We have this region of resistance that did form last week during Friday's closing prices. I would anticipate if we do get signs of sellers coming into the markets, if we get a candlestick price action signaling that yes, indeed, there are sellers into the markets, I will consider looking at shorting opportunities potentially for prices taking out the lows that are residing below this region. This is almost 100 pips to the downside, and the target that I would want to pay close attention to is 154.32 in the near future. Quite interesting noting how that is going to play out. Wangai wants us to look at AUDSD. Hello, Wangai. Beautiful to see you here. Australian dollar against US dollar. We have been seeing numbers coming in really positively for the Australian region. Not only last week, we did see GDP numbers coming in positively. Employment numbers has been heading into the right direction. Balance of trade also did come out positively as a result. And we did see prices starting to move to the upper side. clear, making higher highs, higher lows, higher highs, higher lows, signaling that the Australian economy is firing on all cylinders. Looking at seasonality, speaking where they've come from, tourism has boosted the economy generally as a result of good weather. We have been seeing last year around September, October, Australia region was hit with massive floods. And looking at Australia, they do have a lot of resources. Most of the iron ores where the rigs usually are positioned, the mining was halted, but mid this year we have been seeing these mining operations resume. We have been seeing things come back into normal territories, and the Reserve Bank of Australia in the near future is anticipated to, and we will want to look at this information once again tomorrow, where we do anticipate the Reserve Bank of Australia to release their monetary policy statement. This one here, we will want to look at this information, this document. The first thing tomorrow that we are going to look at in the morning market call is the report. Where do they see the economy heading to? And we are going to look at this information, ask ourselves, should we look at more buying opportunities on the Australian dollar against the United States dollar, or should we look at more selling opportunities as a result of the information that is going to be made available to us, the public, and as traders tomorrow? But considering where we are at the moment, if prices do break this region of resistance, I will consider looking at more net long opportunities to the upper side, looking at if Reserve Bank of Australia are going to hold interest rates. It means the economy is generally anticipated to be stronger as it attracts more capital into the country. But on the other hand, if the tone from the Reserve Bank of Australia is going to be negative, I would want to look at short-term retracements, but I'm going to lean more with what the Reserve Bank of Australia is going to do in the near future. AUD card, not AUD USD. Okay, we did see Canadian numbers, employment numbers come out last week. Let me look at AUD card. Here you are. Now, looking at Australian dollar against the Canadian dollar, let's wait for the charts to load. Or somehow you want us to look at euro dollar. We shall look at that. Now, the Canadian dollar did strengthen last week as a result of the positive numbers that did come out. As a result, we did see prices tanking to the downside. I will want to peel off Fibonacci from this high to this low, considering that prices, if it does come into this region, which was a region of support, if it does come back and is tested as a resistance, I would want to look at shorting opportunities potentially in the near future. Now, looking at price action, this was massive selling from these highs to these lows. This was almost 1% of the total value of USD Canadian dollar, signaling that yes, indeed, sellers are in these markets. If we do have this region of resistance forming, holding, I would consider looking at shorting opportunities potentially to the downside, and the trend could be reversing. But this is going to be dependent on the data that is going to come out once again tomorrow for the Reserve Bank of Australia. We did have Logan wanting us to look at Bitcoin. Okay, we shall look at Bitcoin. I have to switch over to TradingView because currently at the moment we don't have BTC yet on our watch list, which is going to be changed in the near future. Now, looking at euro against USD, we have just seen numbers coming in positively just a few moments ago, but euro USD has been consolidating for quite some time. If I switch over to the H4 time frame, euro USD has neither been making clear higher highs, has neither been making clear lower lows. We did have signs of markets pushing to the upper side, breaking the highs that was formed on the weekly candle, but we did see it close well below that range. Considering how the markets are opening at the moment as it stands, buyers are in control over the markets. Ever since Asia did open, the numbers did come out good for Germany in terms of industrial production. I would want to look at this region of resistance. Prices are a bit choppy currently at the moment, but if we do break these highs, that is around 1.16750. A clear breakout to the upper side where we get a candlestick, a bullish candle that closes well above this range. I will consider looking at buying opportunities. If at all the Fed Reserve are going to cut interest rates in the next 2 days, I would consider looking at more net long opportunities on euro against the United States dollar. Looking at the short-term time frame, the trend has been to the upper side, prices making higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. Currently, at the moment, as it stands, I would consider looking at more net long opportunities on price action. Before I go over to Bitcoin, I would want to look at equities, starting off with the US 500. We did see a bit of choppy price action last week, considering the markets, especially the stock industry. These are most of the private companies in the United States of America, the top 500 companies to be exact, including the top 7 companies, including Nvidia, Apple, Meta, Tesla. We do consider price action to continue moving further to the upper side. If at all the Fed Reserve are going to cut interest rates, investors will want to put their money into higher yielding assets, and most of the times this is usually stocks. I do anticipate the prices of S&P 500 to move to the upper side. Not only the S&P 500, I would also consider looking at the Nasdaq, the US 100, similar price action playing out at the moment, where we are now making high highs, high lows. Prices are a bit choppy at the moment as it stands, but this is well normal. We did have a rising wedge. Prices broke to the upper side last week, closed well above the opening price. We have seen price action bullish ever since Asian session did open. As you can see here, we had signs of buyers in the markets already during Asian session. Maestro, thank you for the love. Now, looking at, I do believe, Mentor, we have looked at GBP, JPY, okay? We have looked at GJ. Now, these sessions are usually updated to our YouTube channel within the course of the day. If you do happen to miss out on it, you can always go and check it out on our YouTube channel. It is updated consistently. Now, looking at price action, I would want to look at US 30, which is the Dow Jones Industrial Average, the heavyweight of the United States of America. We have been seeing choppy price action, but considering the price action, we are now seeing more buyers coming into the markets, more bullish presence into the markets. Looking at ever since Asian session did open, market rally to the downside, we had a hammer forming. This is a beautiful price action candlestick to look out for in the markets. And currently at the moment as it stands, I do anticipate prices to continue moving further to the upper side. Looking at UK 100, UK 100 has been consolidating ever since the news was released last week, prior to last week on the budgets. We are still in this tight range. We have found a region of support around this particular region, which is around 9,673, but signs of buyers coming into the markets. If markets do close well above the high that was formed during Asian session today, I will consider looking at more net long opportunities to the upper side, potentially taking out the highs. I wanted us to look at gilts. Here it is. We did see gilts move to the downside quite aggressively last week, but in the near future, if UK government is going to cover up for the budget deficit, they would want to make their treasuries and bonds much more attractive to investors. As a result, they will want to offer higher yields as a result. Now, looking, this is expiry of 2026. I would consider UK gilts to start picking up currently at the moment as it stands up until next year to cover up for the budget deficit that they did have. We did see prices turn to the downside when they did release their budget. It was around this particular day on the 26th. This was the particular region. We did see gilts move to the upper side, almost 0.7%. But the following day, gilts did tank quite aggressively to the downside. This was more than 2.46%. Currently, at the moment, as it stands, it's trading at 91.23. I would anticipate it moving further to the upper side. Now, I would want to switch gears into crypto, and I would want to use TradingView for this. Now, looking at the heat map on crypto, currently at the moment as it stands, Bitcoin is up 2.72% on the day, trading at $91,742 a coin. Ethereum is up 3.31%, XRP up 3%. Crypto have recovered on the past 24 hours, but if I switch over to a monthly time frame, things are not that good. But you can contest, it has come a long way. There was a point Bitcoin was down more than 20% in the past few months. Considering the information that we do have currently at the moment, if the Fed Reserve are poised to lower interest rates, then it means Bitcoin is going to do much better because we are looking at BTC USD. Crazy Jamal, thank you for the follow. Keep on HFM. This program is very important. Toxic, I do appreciate your words, okay? It really does mean a lot. Looking at Bitcoin on the past 4 hours, I would want to zoom out on my charts. Considering, let me look at the daily time frame. We did see crypto quite aggressively move to the downside. This was back ever since October. Early October, crypto did tank quite aggressively. If I can just put it into perspective, from the highs to the lows, Bitcoin lost more than 36% of its total value in less than 48 trading days. Quite interesting. But looking at the moment, we are now starting to see signs of bias coming into the markets. The lows that it was made came at a psychological level at 80,000. Now, at the moment as it stands, we are now seeing a change of character. Prices making higher highs, higher lows, higher highs, higher lows. We do have this pattern here forming that I'm really interested in. And if I can just put it into perspective, this was last month, earlier this month, to be exact. If I can switch over to a 1 hour time frame. Prices did consolidate on 6th of December, heading on to 7th of December. This was during the weekend, but currently at the moment as it stands, we are now seeing signs of buyers into the markets. Now, remember, once again, if institutions want to buy Bitcoin as a result of the Fed Reserve lowering interest rates, they will want to do it as early as now. Now, looking at the information in the next 2 days, I do anticipate the Fed Reserve to cut interest rates, which means investors are going to push their money into Bitcoin. As a result, I do anticipate prices to continue moving further to the upper side, potentially taking out the highs. If we do break this high around, if I can just put it into perspective, 94,066, prices are poised to move further to the upper side. That's going to be it for me for the morning market call. Marielle Mercy, thank you for joining the stream. There's a lot of opportunities for us as traders. December is our time. HFM is the platform to use. And the Shield 500 account is the best Christmas gift you're ever going to have. You have an opportunity to trade real market conditions, basically risk-free. I shall see you when you do see me next. Stay safe. Take care of yourselves.